You might remember a couple of weeks ago on the checkout, Rachel Botsman talked about collaborative consumption, you know, stuff like car sharing and go-getting. Ah! Don't worry about it, mate. I think she said their insurance covers it. Tonight, Rachel looks at another group of businesses that could hurt your bank almost as much as you want to.
Hello?
Hi, Rachel. I need to borrow $10,000. Can you help?
Sure.
Great.
Just borrow it from a total stranger.
What?
Bye.
Can I borrow $10,000, please?
Sorry?
Can I borrow $10,000?
No.
$1,000?
I'll buy you a cup of coffee. How's that? I'm sorry. You look shifty to me. You look very shifty. You do.
Hello?
Yeah, well, thank you very much. That was a complete disaster.
Borrowing money from random strangers on the street is a pretty dumb way of trying to get $10,000.
Hey, it was your idea.
But borrowing money from total strangers works if it's done the right way. It's called peer-to-peer finance. As consumers, personal loans are some of the biggest transactions we ever enter. And in Australia, the vast majority of us borrow from the big banks. But just because we bank with them...
Excuse me, your spot's back there, lady. I'm next with these bastards.
...doesn't mean we like them or the way they do business. In Choice's 2011 Bank Satisfaction Survey, banks rank significantly lower than credit unions and building societies. Even though we hate the banks, we stick with them. They might be bastards, but we know they're safe and reliable, right?
Yeah.
There've always been alternatives to the big banks like mortgage brokers, co-ops, mutuals, credit unions, or my favourite, rich relatives you can pretend to like and hit up for cash. But now, excuse me, can I borrow $10,000?
Sure.
Oh, come on. This is set up.
It is set up online. Society1 is currently the only substantial Australian example, but around the world, there's over 300 peer-to-peer lending businesses that let you borrow money, not from a bank, but from the crowd. Here's how it works. People who want a personal loan register online. They're organised into groups based on their credit scores.
Oh, come on.
Lenders pick the amount of risk they want to take. Loans to higher-risk borrowers yield higher rates of interest.
Yeah, come on in for the big bucks. Come on. Hello?
To minimise risk, a loan is typically hedged. That is, split between multiple borrowers. So you're lending and borrowing money from total strangers, but in a structured way that takes out a lot of the risk, both real and perceived.
All right, that's lovely, but banking is serious business. Show me numbers, not synchronised swimming or whatever all this is.
The first big social lending company was Zopa in the United Kingdom. £90 million was lent on Zopa last year. People can borrow up to £15,000, but each loan split into £10 units. So no lender has more than £10 in a single loan.
Nice hedge.
Zopa's now got 2% of the unsecured personal loans market. Last year, worldwide, more than $1.5 billion was lent peer-to-peer.
Interesting, but I have homes to repossess. Excuse me. All very warm and fuzzy, but you wait till someone defaults.
Defaults are a risk for any type of loan, but on Zopa, the average default rate is 0.49% on an annualised basis, whereas for traditional banks, it's more like 2 to 3% for personal loans.
Yeah, but that period includes the GFC.
Well, whose fault was that? Anyway, the critical thing about peer-to-peer lending is knowing a real human's depending on you to repay, not just a massive, rich financial institution you sort of hate, makes borrowers more accountable. They're more likely to pay back strangers.
I'm sure she'll say something about how it's still a legally binding loan and you shouldn't borrow if you can't repay it. You will say that, won't you?
Sure.
Thought so.
It's true. Peer-to-peer loans are legally enforceable contracts like any other. So just like banks can send in the debt collectors, if things don't turn out, peer-to-peer lenders can do the same thing. If that happens, you're on your own.
Well, if it's the same, then what's the point?
Well, apart from the low default rate, the average return for peer-to-peer lenders with established players is significantly higher than the rate of interest for cash deposits. which might be why the executive director of the Bank of England recently said peer-to-peer lenders could in time replace high street banks.
Yeah, but even when banks are riskier, we're safer because we're guaranteed by the government. See, the problem with all you P2 people is that you're not big enough to be too big to fail.
I think you missed the spot. Thanks. Yes, government guarantees have been great for the banks. In fact, regulation is a big challenge for social lending. It's such a new thing, it's not always clear how it fits with existing rules. So the main peer-to-peer businesses in the UK set up their own industry rules, which the governments are now adopting.
Finance guys writing their own self-serving rules. Now that I can relate to. Eh?
The UK rules actually protect consumers and try to keep shonky operators out of the market. The peer-to-peer lending scene is developing slowly here in Australia. It's a smaller market, but there's still lots of regulatory issues.
She's just getting around to precautions for consumers now, I think.
Yep, so if you're interested in getting a peer-to-peer loan, especially in these early days, do your homework.
Yep, she said be cautious.
Did she say the National Consumer Credit Protection Laws apply to Society 1?
Not yet.
I was about to.
But that might not be the case for other peer-to-peer services.
I was about to say that too, and
But peer-to-peer businesses may not be covered by the consumer credit laws.
that. But thanks for the...
So if you get into trouble, you should get advice from a community legal centre.
Sure, but the most important thing for consumers is
Shop around for the best
deal. Are you going to be here long?
To the end, I think.
That's now, actually. Peer-to-peer lending is a big disruptive force in personal loans that can be great for borrowers and lenders alike.
Sounds too good to be true.
Well, you might say that, but Society 1's working with serious businesses too, like Perpetual, Ironbark, even Macquarie Bank.
We're what? Oh, you are kidding me!
Oh my God! Somebody call an ambulance!
Actually, don't bother.
Somebody bail me out.